Okay, folks, welcome to another Thursday Night Stock Charts Live. This is where we review the weekly charts and we talk about how it looks as though we're going to close out the week, and we're going to talk a bit about strategy. Our strategy for this week has been simply book profits where we can. We haven't sold much, honestly. We haven't bought much. We've been fairly disciplined in our approach and waiting for the market to come to us. And you did see a sell-off late in the day today. We're probably going to get a continuation move lower, but I have some good news, I think. I think we're probably going to rally into tomorrow afternoon, a short covering Friday. So I contemplated opening up a new short position today, but I backed off. So sometimes, and this is what I've been coaching members, is that sometimes the most difficult decision to make is not to trade whatsoever. We have a strategy that's out there, and the strategy is that we do believe that we're going to rally into election day. Might that change? Yes. What could change it? I'm going to talk about it in a moment. I'm also going to talk a bit about our strategy as we proceed into election day and how we plan on being positioned as we go into probably one of the most tumultuous periods of our lives. So we first off begin by saying hello to people as people populate. Amerimigo, hello, sir. RL, up, down, yep. That's what the Stokes are telling us. Nestor, hello, brother. RL, PTOM, Peloton. Yeah, somebody brought that up to me as a next shoe to drop. I haven't even taken a look at that chart in quite some time. Oliver, hello, sir. S&P retest lower lows on Friday, recovery to rebound. Agreed. Okay, let's talk a bit about what's going on. And I have been steadfast in saying that while I believe the market to be, or was, very overbought, especially the triple Q names, I believe that there would be, Anthony, hello? I believe that there would be sector rotation. And to a certain extent, we've seen it. You saw a lot of froth come off the triple Q names. And I have been of the mind that we would probably see a rally into election day, as I previously said. I'm still of that mind. Why? The Federal Reserve. News is coming out now that continues to be very, very concerning. It's akin to a banana republic in a way. Twitter came out today. This is the primary mouthpiece of the president, his ability to speak one-to-one with the American people. Twitter's new rules will flag if Trump claims victory, early victory. What about Biden? Why just Trump? Why not Biden? I find it extremely disturbing, to say the least. Add to that, you had Zuckerberg from Facebook out earlier. Twitter's move follows an announcement by Facebook CEO Mark Zuckerberg last week. The company will add labels to posts from candidates that try to declare victory before the results are in. That might not be for weeks. So we can only expect that the powers that be are going to continue to line up and be very, very bold and show us their cards of what they plan to do. The Democrats today blocked did a filibuster in the Senate of a proposal by the Republicans to offer relief to those impacted by the coronavirus. It was blocked. One of the demands of the Democrats was to modify, basically get rid of, as we know it at current, the limited number of states that have voter ID laws in lieu of a simple signature. Why? We should be tightening up our election standards. They want to loosen them up. They expect that about 60 million additional mail-in ballots are out there floating around, and Lord knows how that's going to disrupt the election, especially as tight of elections have been since 2000. So, as we proceed into this pretty much guaranteed period of volatility, the question I have to ask myself is this: do I want to be long of equities? The answer, no effing way. Not on election day, nor on probably the subsequent days for quite some time, until we have a result that's acceptable to the American people. Will I remain long of gold stocks? That's the exception. Will I remain long of silver? Yes. But you may be asking, Bob, wouldn't there be a flight to the U.S. dollar if everybody goes selling stocks as what happened earlier in the week? And won't gold and silver act inversely of the U.S. dollar? No. What's different this week and the inverse relationship, which is traditional, working, strong dollar, weak gold, weak silver, weak commodities, the difference that's going to reveal itself after the election is that there will be fear, a tremendous amount of fear. So while, yes, the dollar may catch a bid, you're also going to see money rotate into gold, silver, anything you could drop on your foot, and it hurts. People are going to want real assets, not Tesla. I'm sorry. So if you take a look back at where we are in history, and for those folks that are out there that have watched me for a long time now, and I thank you, you know that I'm a student of history, and I like to look back at periods similar to the Elliott wave theory, except I couldn't tell you a darn thing about the Elliott wave theory, but it's along those lines. You watch history to get a feel for the present, and you overlap. So when you go back into time, this is a quarterly chart of the S&P 500. Here's 2000. Here is November, February. There we go. November, election season of 2000. We were just coming off of recent highs, the stock market bubble, the dot-com bubble. Look at where we're at right now, how extended we are, and how we've been topping out. At current, we're flirting with a failed breakout on a quarterly basis. Flirting with it. May not happen. Maybe we'll go off to new all-time highs. I don't know. I'm not that smart. But what I do see are signals, similar patterns forming. And when you take a look at your RSI, lower highs and lower lows. What do we have now? Lower highs and lower lows. We haven't seen that since the same time period back during the 2000 and into 2002 bottom of the stock market. So history is repeating itself, and if you take a look at valuations going back to 2000 are eerily similar. Overlaid in red here is PE 20, which equals overvalued. Look at how far extended we were during that time frame versus PE 20 overvalued. And look at where we are right now. If anybody ever took their eye off of StockTwits to see what's trending, Twitter to see what's trending in terms of stocks, stopped running screeners to see what momentum stocks were popping up higher, and they began to look at valuations and appreciated the risk and the very, very thin layers of ice that we are skating on top of right now, they would appreciate the fact that you ought to look back in time and say, okay, what happened post-election 2000? The election took place on November the 7th of 2000. Right here. We did not have a winner the following day. For those who remember, those who are old enough, candidate Gore retracted his concession. I remember it as clear as day. The next morning, the markets rallied only to reverse. And ultimately, before we hit a bottom on November the 30th of 2000, we had dropped nearly 11% in a very short period of time. And America was a lot different a place back then. You had confidence in the systems at that point in time. I don't think we've ever been, since that point in time, as squeaky clean as we were. It's a time gone by, before 9/11. So this is what concerns me. Similar price action, if not worse, post-election. What would help me sleep better at night? Vastly strong polls by the president, but the audacity of the opposing party to try to steal, lie, and cheat through as many scandals as we've seen over the past 4 years. They're hungry for power, and I'm shocked at the apathy of the Republican Party, who believe that they'll probably do best without Trump. But guess what? They're coming for you next, Republican senator, Republican Democrat. If you're moderate Democrat. So this is what I'm worried about. This is what keeps me up at night, and this is the way we're going to be focusing on positioning into the election, and that is a lot of cash, gold, silver, and that's pretty much it. We'll swing trade into the election, but I don't suspect that we'll be long of much in terms of equity. Let me go back to comments. Tommy, hello. How about BRZU selling prior? I don't know. I kind of like emerging markets, but if the dollar surges, it might hurt emerging market. That might. It probably will hurt emerging markets. It's a thought to lighten up. We're not going to do anything just yet. Not just yet. Okay. So let's take a quick... Hey, Patrick. William, hello. Baba Pops, can inflation make up for weakness in the market? Can inflation make up for weakness in the market? Yeah, in certain sectors. If you see inflation, you'll see yields rally because there's an anticipation that you're going to need higher yields to battle inflation, and the banking sector should rally. But I'm not exactly sure how to answer that question. If you want to rephrase it and refine it a little bit, I'll be more than happy to address it. But we're already seeing the market is, for all intents and purposes, a measure, a benchmark for inflation. Stock prices are, going back to this chart here, the Federal Reserve says there's no inflation. Well, I'm sorry. This is the exact definition of inflation. My dollars can buy fewer shares of Amazon S&P 500 now than they were before the dollar began to correct and the stock market continued up higher. So we're seeing inflation. There's no doubt about it. Larry. Okay, let's take a look at the weekly charts. I went off on a tirade there, but it's important to at least speak about these markers that we're seeing and not ignore them. The last thing I want to be is apathetic. Let's take a look at how we are poised to close out the week. And as I always like to say, while these are weekly charts, and 4 days out of the week is now firmly in the books, history, can't change it. There's one trading day left to go, and we know that one trading day can make a big, big difference. So let's keep an open mind, not draw any conclusions, and we'll begin with the TLT, the 20-year Bond ETF. What are we doing this week? We were lower, we're now higher. And that means that yields are pulling back yet again. But if you take a look at the 10-year yield weekly chart, let's make sure this is updated. We broke out. Back here, pulled back, reversed. Remember, this time last week, 1 week, this very moment, we were trading down below this lower band of support in blue. Where do we close? Just off the highs of the week. One trading day. That occurred. Huge move. We attempted to rally this week. We've been rejected. Bearish reversal bar. So it appears as though, as of this recording, it looks as though bonds are going to move up higher. Tips higher on the week. An inside week, but I'll tell you, last week's price action was not wonderful. That's a bearish reversal bar. The fact that we didn't see a continuation breakdown is good. Volume is rolling in light. MACD very, very extended. So the tips, while up on the week, are very, very long in the tooth. We're at near all-time highs at current, but the Federal Reserve, there's no inflation. There's no inflation, folks. The U.S. dollar. This is a monthly chart. And granted, it's early in the month. I'm going to drill down. But a fairly bullish month. This time last week, we were flirting with resistance. We're now above it. Weekly chart. Weekly chart, RSI, Stokes hooking up. This looks to me to be a week of, this is not an accurate chart. This is as of the 9th. This is inaccurate because we closed at the highs of the day today, and that's not accurate. Let's go to the UUP. That'll be updated. This has not been updated yet. Okay. So the dollar at current is flashing a hammer formation. We're just off the highs of the week. We have broken out technically. Why does this matter? Gold, silver have been rallying. They've paused in recent weeks. Let's update this. A lot of people believe that the strength in the U.S. dollar is caused by the Brexit talks and the euro dropping. That's partially true. But I think it's mostly due to the fact that you're seeing people sell. Where are they going? They're going into money market funds. They're buying dollars. So we broke out this week above a secondary downtrend line. Hardly a firm breakout above a primary upper band of resistance. But there's a case to be made that maybe we're trying to find a bottom short term anyway. Longer term, I think the dollar's doomed. That doesn't mean we can't have a counter trend rally. So will the euro affect it? Sure. What's the FXE doing this week? It's down. Off the lows of the week. A lot of topping action here. So they may carry the dollar for another week or two. The yen on a weekly basis is up. So the yen is still looking good here. We may see a continuation breakout, and then may keep a lid on a dollar rally, which would be good for gold, good for silver. VIX. Weekly chart. A very volatile week, as one might expect for the VIX. But we have broken out. I think we're stuck in a trading range here. While we're seeing a lot of topping action, one trading day left to go. Maybe we'll pop tomorrow. But again, I think that what's going to happen tomorrow is that we're going to get an early morning sell-off and then a short covering rally going into the weekend. That's my thought. So the VIX should end the week lower than where we close out the day today. The Dow Transport, oddly, very, very firm. And this is one of the indexes that I use. I've been saying that I believe that the Dow Jones is probably going to go to new all-time highs prior to the election. When do I give up on that? I give up on that if I see a failure on the Dow Jones to hold, the Dow Transport to hold this breakout point. Remember, we came only a few points, a couple hundred points away from new all-time highs on the Dow Transport. So one should conclude if the Dow Transports are breaking out to new all-time highs, well then the Dow theory holds true that the Dow Jones should validate. And here's the Dow Jones. It has flashed a breakout point failure. This is a problem. We broke out here, bearish reversal bar last week. If we close down below this support level tomorrow, that's a major, major concern. That puts a real chink in my confidence about the Dow Jones being able to rally into election season, because we know that usually when you get a bull trap or a breakout point failure, you get a retracement back down to the lower band of support. So ideally tomorrow we get a big rally closing back above 28,000. That's a big, big rally. So we'll see. It's a long shot. The S&P 500, another breakout point failure. We broke out here the week of the 24th. Now, breakout point failure. A retracement back down to support would take us down to, let's call it 3250. We'll round it up. We need to see a rally back tomorrow. And this chart, this is a daily chart now, not awe-inspiring. We had an outside reversal day today. We broke down below support. Volume was about average. The only thing that gives me a bit of hope are the Stokes. And I've been saying to members for the past week and a half, beware the Stokes, beware the Stokes. We're not doing anything. As these Stokes continue to trade down below the 50 mark and fail to flatten out, I'm not buying. I'm not buying anything in that realm. I'll sit in cash. I'll wait. It's the best thing to do, because what happens when Stokes are down below 50? Rallies fade. What happened all week this week? Rallies faded. Whether it be yesterday, we closed up, but did we fade on the day? Yep, we faded. Where were the Stokes? Declining. But now they are, quote unquote, oversold. So I suspect that there is a possibility that we may get a move higher tomorrow. This is a 2-hour chart, perhaps a higher low here. Let's annotate this for giggles. What we need to see. Big volume into the close. Big, big volume. So what we need to see is Perhaps another retest of this lower band of support tomorrow morning. Then watch for a reversal bar. If this breaks, if we close down below 33.29, I suspect that we may even get a rally next week, but we fade again. So it would be a horrible thing if we close out the week back down below 33.29, because the weekly chart setup will be not pretty. Remember the breakout point failure, the bull trap. That's the big thing to keep in mind. That needs to get negated if we want to have a fairly decent week next week. To the long side anyway. To the short side, it's all good. Let's take a look at some comments. AD, do you think we are in bull markets? Yeah, we're still in a bull market. Bull market's not over. I mean, because it all depends upon, it all comes down to time frames, right? To me, a bull market is, I look back and I take a look at a monthly and a quarterly chart, and I ask myself, are we putting in higher lows and higher highs on a monthly chart? Answer, yeah, we're still good. Now, that's from a longer-term trader's perspective. Do I see landmines on this chart? You're darn right. We've been putting in higher highs, new all-time highs. What has RSI been doing? Negative divergence, failing to confirm the new highs. So this is why I believe that the Federal Reserve can keep this party going into election day unless the adverse party gets to Powell, which you never know. The minute they take the punch bowl away from this market, I mean, the market's sending you signals right now. It's not a healthy market. It's in need of heroin. And the Federal Reserve is the pusher. And if the Federal Reserve does not show up to the party with spiked punch bowl, it's all over for a long time. So we need to come to that reality fairly quickly. If you're looking at the market on a very short-term perspective, on a daily perspective, you could argue that we're under pressure here. We've broken the support level, so short-term, it's a seller's market. You want to short the market, it's probably in your favor. But longer-term, I'm still thinking that we may rally back. Patience is a virtue, no doubt about it. I was not born with it. I had to learn it. Oliver, you talking about over in China with Taiwan? Yeah, I was going to put my background as being the China problem. Yeah, it's a problem. I wouldn't be a bit surprised to see a move on Taiwan, as they're already doing. What will that do to U.S. markets if there's a threat that there's going to be a conflict with China? What happens to the Trump vote? I don't know. They like to say the stock market is not the economy, which is true, but let's face it. To the American taxpayer, the American worker with a 401k plan, the stock market is the economy. It's their retirement. If that comes under pressure, so do the votes for the president. So, longer term, still in a bull market, lots of threats short term, and even in a monthly basis, this market has a lot of concerns out there. The IWM, we broke support so far this week. We were in a consolidation range, a flag formation, and we were looking for a breakout. Wasn't to be. At current, we're trading down below the lower band of support. One trading day left to go. We can't draw conclusions just yet. Down volume is very light so far. Let's pick this up. I'm running low on time. Half hour to go. I want to do some chart requests. The banks broke weekly support. That's due to bonds rallying back and, of course, a weak market. Volume is light. Technology. We're down over 3.5% on the week. Volume should come in above average to the downside. I think the technology is most susceptible here. The semis, Here's what leads me to believe that we're probably going to get a counter trend rally back on these names. Look at how we're rallying off the lows. And rarely, absent a geopolitical event, do we just go straight down. Normally you get a pullback, a rally, then a failure. In this case, we managed to put in a new higher high. That happened back during the 2000 bubble. Actually, I'm sorry, the financial crisis bubble. But then we rolled back over, and then we went into that bear market. I think that prior to the election, they're going to rally the tech stocks back, perhaps not make new all-time highs, probably put in lower highs, and then after the election, we roll over. Biotech's very weak. Nothing to do here but watch. Energy, horrible. Horrible energy. If we close out the week at the lows of the week, we're probably coming down here to, this is the XLE, to $30.99 per share. Very weak chart. Let's take a quick look at a daily chart. Yeah, this is what happens. They gapped it down below support. They tried to rally it back. That's overly optimistic bulls. And sure enough, we rolled back over today. Continuation breakdown. Stokes are, quote-unquote, oversold. But they could stay oversold. Healthcare as a whole, we had a failed breakout a couple of weeks ago. Looks like we're going lower here. Oil, big problem. Gap down this week. We're down over 6% on oil this week. Horrible for the frackers. Big Trump voters. Emerging markets, taking it on the chin this week. Right at support. We really want to see the dollar weaken up because that'll benefit emerging markets. Gold. Let's make sure this is updated. It is. Bullish reversal bar on the week. And I was talking to members about this stochastic here on a weekly basis. I drew this line, I don't know if it was last night, the night before, and I said what we want to see here is a higher low. And we want to see these Stokes flatten out. And sure enough, we're respecting this lower band of support. So while gold had a volatile day today, on the week, it's firming up very, very nicely inside of a triangle formation. So we remain very bullish on gold. How do we close out the day? I'm not loving the price action on the day because we faded, because the dollar came rallying back. 1975 is resistance. Volume is light. Jury's out on gold. All right, the gold miners up on the week. We're long of the gold miners. They tried to break out. They were rejected. Take note of the Stokes. Hooking up. Silver. Gap down this week, but however, we're rallying off the lows of the week. What are Stokes doing? Hooking up. Higher lows. The commodity space is healing. So the markets are where gold and silver were 2 weeks ago, meaning the equity markets are where gold and silver were 2 weeks ago in terms of correction, backing, filling, and getting ready for another run up higher. All right, so with that, I've covered most of what I wanted to. I know, Tommy, you're out there. BRZU. Let's talk about that for you. We're holding weekly support, very close to a doji formation. I'm not selling right now. I'm not adding, but I'm not selling right now. And the issue with BRZU, and I think I went over this last night on Market Wrap, is that Brazil is a major oil producer. The USO is down 6% this week alone. So that does not bode well for Brazil. So we're going to be cautious. We'll hold on to the BRZU for now, our emerging market trades. Why? Because I believe that the rally that we're seeing in the dollar is short-lived. We're going to roll over. When it does, we'll add more because emerging markets are going to take off. All right. Let's go to some stock chart requests. Okay. We have Nestor with Workhorse. Seems to be everybody's favorite lately. Do. All right, load up here. Oh, so I got to do this. This is where I plug. I put on my smile, and I plug. I shill. I sell out for the man. This portion of... Where is it? It's gone. Oh, here it is. Thursday Night Stock Charts Live is brought to you by TrendSpider, next generation of artificial technical analysis, automated trend lines, seasonality, analyst ratings, huge stuff. My favorite, automated trend lines and alerts. In all seriousness, if you don't have TrendSpider and all the automation, you're way behind. Technically, you're losing an arrow that should be in your quiver. It's a time saver, and I'll tell you, I say this all the time. It's worth repeating for new visitors. It's my spell check for technical analysis, and I'm pretty darn good at spotting support, resistance levels. But sometimes, I got to say it, they pick up stuff that I miss. Workhorse, let's go through it. Oh, there's a link below, 35% discount. Take advantage of it. Let's go through Workhorse. Could have sworn I went over this morning. All right, so it was either last night or this morning. I took a look at this one, and overall, I like Workhorse. The problem was not so much with the monthly chart or the weekly chart. We had broken out last week, continuation breakout this week. My problem was with the daily chart, but let's stick with the weekly chart for a moment. We continue to put in higher lows. I love these Stokes here. Nice hook up with higher lows. I'm loving RSI. A little W formation, a breakout. Good stuff. But it needed a pause. And the reason why was that you have a market that's under pressure. And we went into the trading day. Maybe it was yesterday we talked about. Yeah, it was yesterday. That's what it was. Yesterday. We went into the day yesterday, leaning into the third standard deviation Bollinger Band. If you watch me for any length of time, you know that when I see that, it's like a red flag to a bull, a red cape to a bull. If I'm looking to get long, I avoid. If it's trading above it, I'll look to short. So I wanted to see a pause here, and we got the pause. So now I think we could consolidate and then move up higher, because the trend longer term is where? It's up. It's up. It's doing well. It's under pressure along with the rest of the market. So I don't see any compelling reason right now, going back to that daily chart, to go chasing it yet. We did not put in a new daily low. That's pretty good, considering the market price action today. But still, we had a long red candlestick. I think there's a good chance that we bounce around in here. Maybe retest 2102. And at that price point, if the market begins to firm up, we begin to close at the highs of the day rather than selling off into the close, meaning the overall market, and Workhorse is performing well, holding support, then consider opening up your position. If the market is behaving poorly, this is a very speculative trade. It's extended. You're seeing some selling pressure already. I would wait for lower lows and wait for the market to settle out and then look to enter the position. Wait for the market to settle out. PTON, when I say settle out, I mean wait for it to open lower, close higher. Then we begin on a 4-hour chart, we begin to see higher lows, higher highs, closing at the highs of the day. Then you know we're all good. Until then, be careful here. Everything's speculative. Everything. Peloton. I haven't looked at this chart in a while. So I need to digest it a bit. Not that there's a lot of data here. The last time I went over it was back here in August. Let's get rid of this. Remove. Remove. There's nothing really to see here on a monthly basis. Not enough data. Let's go to a weekly view. Yeah. Automatically, you got to avoid. You have to avoid. Take this off. This is the power of TrendSpider. You know, I would tell you, without the automated trend lines, here's your resistance level. But with a click of a button, here's where your true resistance level is, because we can't break through this upper band of resistance. We continue to get rejected. Now, if we happen to close above this resistance level at current, this week or next, then you're going to want to watch for a retest and then a rally up and into 92.40. That marks the recent highs. That'll be your next resistance level. But at current, resistance is at 82.401. Daily chart. Bearish key reversal day today. They tried to break it out. It reversed. Doesn't make it a bad stock. It just makes it a stock that people are saying, uh-oh, let's make some profits real here. You're seeing profit taking. What's going on here? Lower highs on Stokes. Lower highs on RSI. Not what you want to see. If we close down below 85, 89, we're coming down to this lower band of support. I think that if we gap down tomorrow, we reverse to close back above 85, 89, that's the market saying, you know what, maybe this is a support level worth defending. But if it fails to hold it, it's coming down here. So I'll do this. I'll share this chart. All right, so that's PTON. Oliver, YTEN. Yield 10 Bioscience. Is this accurate? Looks that way. Whoa. Big day today. All right, let's pull back. Rinse, wash, repeat. Same process over and over again. All right, so monthly chart. It stopped going down. That's good. We have broken out. But it's like a breakout in time. It's basically been stagnant for months now. And now it's beginning to drift up higher. Not my favorite kind of breakout. Weekly chart. I think the weekly chart tells a better story. Here's that monthly breakout here. So what I'm doing here, for folks not familiar, this is a weekly chart, but I'm able to overlay monthly support levels on a weekly chart. So it saves me time from toggling back and forth. So what they're trying to do this week is break it out, but obviously it's been rejected. You can't buy this stock. Well, you know what? Let me refrain. Let me hold it off 1 second. Let's go to a daily chart. Big breakout day today. So the concern I have here is that take note of these volume shelves. What this represents is overhead supply. And it's really thick as thieves up through here. $8 per share. Where did we close? What was the high of the day? High of the day was $8.45. So you could argue that this is where the selling pressure ends. This is all overhead supply. Buyers from back. Buyers from back here, they want their money back. And from back here, they just want their money back. They're not looking to get made whole. That's overhead supply. Daily chart. Here's what I would do on this one. I would create an alert down here. I'll keep sensitivity a little bit wide so that if it comes in the area of this breakout point, I want to know about it. So for those folks that are new, what am I doing here? What I'm doing is I believe in that 85% of the time, stocks tend to retrace down to a breakout point, and I'll talk about that in a moment. So if you touch, bounce, pop. All right, our alert's set. So here's our breakout point. We gapped up today. What we're looking for, because think about all the time we've been down in that trading range, months and months and months. So traders like me and many of you out there are OCD, obsessive compulsive disorder. We want to make sure that this is for real. This gap up is for real. How do we know it's for real? How are we validated? Well, how we're validated is that we retrace all the way back down, as painful as it may be. Retrace all the way back down, and what was acting as resistance, meaning this resistance level here, should now act as support. There should be buyers down there. And if it fails to hold that support level, well, you're going to be patting yourself on the back because you showed patience and you didn't buy where we closed out the day today, or especially up here. Think of the poor bastard that bought at the high of the day today. So wait for the pullback. It's probably coming. Another strategy would be simply to identify a support level. Oh, I didn't realize this. We're still trading above the third standard deviation Bollinger Band. Yeah, you really need to wait for a pullback here. Let's go to a 4-hour chart. Yeah. This is what happened. The gap up became extremely overbought. Not a bad close, but still, I think we're pulling back here on YTEN. Look at how low it got intraday. I think that we could still retrace back down. Maybe to 5.37. That's in and around that neighborhood. That would be considered a retest of support. We have seasonality going back 10 years. Do we have more than that? Yes, we do. We have 14 years worth of data telling us how September behaves. It's a pretty good month, up 57% of the times. Then it drops off in October and November. So just be aware of that. It comes back to life in December. Click of a button, folks. That's the value of having this tool. TrendSpider, 35% off below. All right, looks like we caught a buy rating back in September. I don't really care about that. All right, so that's YTEN. I spent a lot of time on that stock. Wait for the pullback. SKF. Ultra short financials. I get where you're going. Okay. How do I put this? If the Federal Reserve gets back in the market and really begins to manipulate things, they haven't been all that busy of late, buying corporate bonds and whatnot. You'll see yields press lower, and that's not going to be good for the financials. But what I can't ignore is the price action of late. There's pressure on yields over the past several weeks to move up. We're seeing a massive W formation form here. The left side is formed, the pivot point has formed, the right side is forming. So in the back of my mind, I'm thinking the trend is beginning to change for yields. That being said, we have an activist Federal Reserve. So I'm torn. So back to your chart, let's talk about the technicals purely. If yields pull back, I become far more bullish on your ETF. And in fact, we have a higher low and we broke out on the day. I have a position in the banks, and I'm not happy to be saying this, but I don't speak my book. I'm not a CNBC talking head. Now, when we take a look at the chart from a weekly perspective, while we've broken out on a daily basis, and that's in the book, we have a breakout on a daily basis, it's done. We haven't broken out yet on a weekly basis, and we're at resistance. I will say that this is looking good. On a weekly time frame, we have Stokes with a higher low beginning to break out. Higher lows in RSI. And I'm not pleased to say this because I have a position in the banks. Daily chart's looking good. I would wait on this one, right? Because if you take a look at where you're trading on a weekly basis, let's suppose you wake up tomorrow, and I'm making the assumption you don't have a position, you're looking to open one. Let's suppose you buy tomorrow. Well, you might be thinking, you know what, I'm buying on a daily breakout. That's all well and good, but you're also buying into weekly resistance. I wouldn't feel comfortable going into the weekend with that. So I would be careful here. I would not initiate, despite the fact we have a daily breakout, I would not initiate a new trade just yet. Not just yet. Going into next week, if we get a pullback, we dance around and we retest the support level, then my opinion might change some because we'll come off of that weekly resistance level, giving us a little bit of room between where we ever pull back to, find support, and that weekly resistance level. We're not buying into resistance. So that's my tail of woe there. I'm not happy to see that the financial ETF is gaining strength, but so be it. What else do we have? PPLT. Platinum. All right, so like most metals at current, I'm not long platinum. We opened up a position in uranium several weeks ago. These are all beginning to behave very, very well. We broke out here August of 2019, bounced around, failure. Now we've recaptured support. Now we're flirting with a breakout. The automated trend lines have resistance at around 95.52. I think that it could be bought on a breakout above this upper band of resistance here, which is at around 92.75, and then add more on a breakout above this resistance level. So I'll share this. I like it because once the dollar resumes its downtrend, these names are going to go on fire. Weekly chart. A failed weekly breakout. We broke out back here the week of August the 2nd. Failure. We need to hold this support level. You really need to wait for a breakout. 83.46. Actually, let's move this down. $82.93 has to hold. Another way to play this, and I don't think it's going to happen in the next week or two, but if we trade into the apex of this wedge formation and we begin to break out, I would be interested in opening up a small position, scratching the edge, and then add more on a breakout above these resistance levels. Daily chart. Reversal bar today. We broke out here. The 28th, we've retraced all the way back down, retested, now beginning to pop up higher again. So it's in a consolidation range. I've given you a couple of ways of entering this trade. But nibble, nibble, nibble. $7 o'clock. I'll go for a few more minutes here. You bought AG today? Good for you. India sends major troops to South China Seas. Yeah, India is really beginning to flex its muscles. I don't think they have a choice. All right. Let's go to Bitcoin. I like Bitcoin. I wanted to see the 10,000 mark. It got to the 10,000 mark. It stopped going down. I think it's going to break out. I'm bullish on it. Especially as inflation rises. No new weekly low. holding the rising 20-period moving average on a weekly basis, bullish on Bitcoin, Boeing. I want to go back in time on Boeing. Because there's a video on YouTube where I called the top on Bitcoin. If you want to search it, here, monthly chart. It was right back here, either November or December of last year. Look at how far we've fallen. This was a head and shoulders setup, left shoulder, head, right shoulder. Here was our neckline. I did the video in here, and the rest is history. We have, for disclosure purposes, we began nibbling on Boeing yet again. We've traded it once before, post-COVID. We did well with it. We sold it at 204. But we opened up very small position, expecting it to hold the support level, and it did not. Bearish reversal bar on the day, broke support. Now that's the thing. You want to hope that your support level holds, but you don't want to go hoping with an entire position. You know, so let's say you want to plan on buying 100 shares of Boeing. Well, don't do it all at once at a support level in a weak market. Buy 10 shares. Wait for some new support level to get hit, and then add more there. Or even better, add more on strength. It's weak. I wouldn't add more here. Stokes is still declining. We broke support, closed at the lows of the day. The only thing I could say that's positive is that we are seeing volume drop off dramatically. So that's institutional distribution that we're not seeing as much as we were. So I'm willing to add more on a good setup, but it won't be tomorrow. Unless, of course, they manage to recapture 160, then that becomes very, very attractive to me. But not until then. Not loving the setup. WMT. Duh, Bob. We have seasonality data going all the way back to 1987. Hey, Pat, you still on? Did you want me to go over IWM, or are you just talking about that? Seasonality for September, up 58% of the time, rises right through November. So seasonally, a really good period of time for Walmart. High level view, bearish reversal bar in the month so far. But we did so up and into resistance. So we're at the upper end of a trading range on Walmart. But we're off of it now. Weekly chart. An inside week. No new high, no new low. You want to see it hold last week's lows. And we'll probably see that. If not this week, then next. Daily chart. Yeah. We broke support today. I think we're coming down to 135, spot 5-1. So I would avoid and watch and see whether or not that support level holds. Stokes are weak and getting weaker. Be careful. If it firms up along with the market, you have seasonality at your back, which is a good thing. Bob, what stock would you buy or prefer for Bitcoin? I would just buy Bitcoin. If you're looking at buying like that Grayscale Bitcoin Trust, they charge like a 2% fee on that. So I would just go with the most popular, and that's Bitcoin. I would go with the pure play on Bitcoin. CCL, Pat? Didn't you send me a text earlier that you bought it? Yeah, I got it. Okay, gotcha. Yep. I haven't checked my text all day. All right, CCL. This is not CCL. Good month so far. You see this volume shelf right here? Very critical. If we close out the month above 1817, that would be significant. RSI is hooking up, Stokes hooking up, weekly chart. We closed above it yesterday. Last week. And couldn't hold it this week. It'd be really I'd be very, very bullish if we managed to close at the highs of the week. Loving the higher lows here on Stokes. No breakout yet. And keep in mind that the airlines early in the week, while the market was weak overall, the airlines were up, Carnival was up, the banks were up. Daily chart. I like it. It's firming up. Again, this 1820 mark, very important to close above. And it's certainly showing relative strength versus the S&P 500 this week. Think about it, Carnival Cruise Lines. So it's a good contrarian play. JMIA. Monthly chart. Not much data here. Let's go to a weekly chart. Note the 20-period moving average is beginning to drift up high. It's not beginning. It has been drifting up higher. And rather than acting as a ceiling, it's now acting as a floor, a rising floor, which is good to see. Stokes are beginning to flatten out. RSI, same deal. And we've broken out on a weekly basis, daily chart. We broke out here, retest, 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 retest. It's looking good. Early stage, I would be a nibbler of it. You're going to get a lot of backing and filling here. I don't see a compelling reason to go jumping in with both feet. You get above spot 9.93. You're above all of these volume shelves here. And that makes the ability for the shares to run that much easier because you have not a ton of overhead supply. All right, with that, folks, it's past 7 o'clock. We're a little bit over here. I'm fading. Everybody have a great night. Have a profitable trading day. Remember, one trading day left to go. Hit the like button, subscribe, whatnot. You know the deal. And everybody have a great night. Be well.